Every investor should have a good plan, and every good plan starts with a goal. Some of the most common questions we hear are, how much can I make? How do I set a goal? And what is a realistic expectation for me? In this video, we're going to talk about how to accurately set an investing goal. Appropriate goal setting may require a shift in thinking for those who are new to self-directed investing. Remember this key point. A proper investing goal is not how much you want to make. It's how much you need to make for the effort to be worth your time, effort, and risk. There are three key points to consider when setting your investment goals. The first key is it needs to be a minimum return expectation. In other words, how much do you need to make for an investment to be worth it? To answer this question, you need to think like a business owner. Business owners are often faced with investment choices. Hiring, purchasing new equipment, inventory control, expansion opportunities, and contract negotiation are all examples of investment decisions that business owners may make on a fairly routine basis. The simple way to ask the question is it worth doing? A savvy business owner will consider all alternatives when making a decision. In a similar manner, investors will look at all of their investment choices when determining whether an investment is worth it or not. Things to consider as alternatives to self-directed investing might include purchasing mutual funds, index funds, or real estate. Other things to consider might include government or corporate bonds, CDs, savings or money accounts, precious metals, lending investments, or even starting a new business. If self-directed investing is going to require more time, effort, or risk than any of these, then it should have a higher return potential. Now, let's suppose that the best you could do elsewhere was 8% a year. Well, a savvy investor may say, as long as I'm making more than 8% annually in my self-directed investing, then it's worth doing because the best I can do elsewhere is 8%. Well, that brings us to the second key in setting a goal. It needs to be a longer-term goal, like an annualized number. Now, this is important because you are virtually guaranteed to go through losing periods in your investing career. You're going to have bad weeks. You are going to have bad months. If you're focused on short-term returns and you're not keeping in mind your long-term objectives, you're likely to run into psychological problems in your investing. For example, if you're focused on a weekly return goal and you fall short of it one week, you may begin doing what we call revenge trading. Revenge trading is when you try to make up for past losses by taking risks that are not normally part of your plan. Now, this path usually just ends up leading to bigger losses. However, if you're focused on a longer-term goal, such as an annual return, you're more likely to be able to brush off a bad week or two and are also more likely to stick with your overall plan. The third key in setting a goal is that it needs to be a percentage. Now, this part is critical. If you're not already thinking in terms of percentage, you need to switch now. This is important because it helps keep your goals in perspective. Well, let's say you're starting with a smaller account, like $2,000. In 1 month, you make $100. Now, some beginning investors may look at that and say, that's kind of a disappointing month. But if you convert that into a percentage, that's 5% in 1 month. That's an incredibly good return for 1 month. That's an annualized equivalent of 60%. That's not likely. You're going to find many investments that are going to pay out better than that. But if your focus is on the dollar amount, you may not realize that you're well on your way to a successful investing future. Remember, a proper investing goal is not how much you want to make. It's how much you need to make for the investment to be worth your time, effort, and risk. Begin right now by taking time to create your goals. Keep in mind the 3 keys presented in this video. A proper goal is a minimum annualized return percentage.